Hey everybody, this is Jose here. We are about to start in no time, in just a few seconds. Could you please confirm in the comments box that you hear my voice and you also see my screen? That would be great because that would be the indication for us to begin. So please type a quick hello, yes, we hear you, Jose, something like that, so I know that we can start. Very good. Thank you so much. Thank you so much. Good to see you all. Good to see you all. Normally we've been running sessions on Tuesdays and Thursdays, isn't it? And this week is a little different in the sense that we are doing a short-term session on Thursday, which normally is longer term. And tomorrow, Friday, we'll do the longer term, which normally would be today, right? So we have changed a little bit of the sequence of the sessions today. So just a little different, okay? But anyway, we'll get started and we'll do what we do, okay? Been missing you guys since the last Sunday. I would say that last Sunday was the beginning of a series of special sessions because we are putting a complete methodology on how to trade using the app with all sorts of rules for entry, for exit, for trade management, for risk management, for portfolio management, you name it. And again, I'm very excited for the future Sunday sessions as well that will take place, that will complete the methodology that we use for short-term trading, okay? So very, very exciting as well, okay? But anyway, I can see that I would say most of you are here and connected, so we are ready to start. So let's begin. Guys, today is April 11, 2019. I'm not sure I said it. My name is Jose Blasco. I will be your guide. Today we are getting together to do some short-term trading and therefore we'll be focusing on the lower time frames. We'll be looking at futures markets, we'll be looking at currencies, spot forex, etc. Okay, and we'll have some fun. We'll grow our skill, hopefully we'll grow our account too. And that's the plan, okay? Before we start, quick disclaimer, the following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good. So we have the disclaimer, we got TradeStation, we got the AutoUFOs, we are ready, okay? But, just a few, like an hour and a half ago or something like that, I received this beautiful email and, I would like to start today with this beautiful email sent by Supply Demand Trader that, let me see. Yeah, I can see Supply and Demand Trader is with us. How are you, Supply and Demand Trader? So Supply and Demand Trader sent us this email today, which is great, talking about the United Airlines credit spread and the Tesla Iron Condor that we put together last Thursday, okay? And just to see, guys, I mean, I love those videos, first of all, because it makes me happy when I see that you guys are utilizing the content and the tools that we provide you with. And not only it helps you, but on top of that, it grows your account. So that makes me double or triple or quadruple happy, okay? But putting all of this on the side as well, sometimes it's quite healthy to begin with emails like this, okay? And I've done that before at times. And the reason has us also to do a lot with the mindset of a trader, okay? No matter if we're talking about long-term or short-term, managing your own trading psychology, where everybody's different, is key. Right? And it's important that we feed each other with trades and experiences and what's going on. You have heard me say many times that we are a team and we work as a team to put together a plan, a methodology, and grow together. And therefore, in that sense, it's quite powerful and hopefully very useful to you as well to begin a session with emails like this, okay? Which we're receiving on a regular basis, but the fact is that this one, I just received it like an hour and a half ago. So, Supply and Demand Trader say, Jose, thank you for the setup you identified last week on the long-term AutoUFOs mentoring session. I took both of them. This is where they are. Okay, so the first point I would like to point at is I took both of them. Okay, so what does that mean? So we are talking about supply and demand trader. We are talking about a trader who practices trading. Is not a person who looks at trading from the theory point of view. It's a person who clicks the button, executing trades, and therefore growing the account and growing the skill by doing so. Now, I could understand, and I had this chat with some of you at times, that sometimes you are kind of watching some of the sessions from the sidelines because you're still in the process of learning or lacking a little bit of confidence and stuff like that, which is 100% understandable. Okay, but in cases like that, my recommendation would be to use a paper money account, a demo account, where you could execute those trades with no monetary risk, but you can still learn and grow your skill by doing so. So it's quite important, guys, that when we put trades together, that you guys are ready to put a little bit of, some of your effort into those trades as well to practice them. Okay, and this may imply use a paper money account if you are not comfortable with using real capital. Of course, that's to be respected, but still watching the trades from the sidelines without doing anything. Just watching, well, it's difficult to become a trader just by watching. It's like watching tennis on TV. You gotta, Orlando knows that very well, isn't it, Orlando? To become a good tennis player, you have to put some sweat into it as well, isn't it? Anyway, so UL Berkov spread, the trade was filled at 23 cents. Currently, the value of the spread is 5 cents and it expires tomorrow. So basically, that will end up very, very closely or almost a sure thing profit at this point. Okay, I mean, you can never say that the way I said it, but you got my point, isn't it? The Tesla Iron Condor filled the same day as well. Last night was 47, which means that this trade has already produced 50% of the profit and it expires next week. So of course, we still have a little more time risk because the expiration date is a little further. But also the amount of premium collected was much greater compared to the United Airlines Berkov spread. So if you were to do the measurement of a rate of return and you were to apply the amount of time you stay in the trade to produce the profit that was produced, okay, I would say both trades are running pretty well. And it doesn't mean every trade will profit. Okay, we'll also need to take some losses. That's why we talk about risk management here, etc., etc. Okay, but that's the way to take advantage of the marketplace. Okay, so little quote here from Warren Buffett. When he says that you need to make money while you sleep. Okay, so well, this is not short-term trading. Today we are getting together for short-term. This is a multiple day trade. This is some people would call it swing trading. Okay, it's a common term in the industry, swing trading, or in this case, using options, selling premium, and waiting for time to pass is called non-directional trading or neutral trades. And you could call it anything you want, but basically making money while you sleep. Okay, so that's the idea. Have the market work for you. Okay, so we're gonna be doing the same thing. And by the way, thank you so much for sharing Supply and Demand Trader. Powerful stuff there and great example and proud of you, my friend. But now we are back to today's topic, which is the short-term trading. And therefore, I will point very quickly at some of the notes that we started putting together last Sunday. So last Sunday, we started talking about short-term trading. In case you are not aware of this, well, I will show you later, or you know what, let me show you now. So here is TradingView with our AutoUFOs app for TradingView, and here is Trade with UFOs Get Together. Okay, I believe that all of you are familiar with this particular page, and in here we have every Sunday we are doing sharpening sessions. Okay, so the prior sharpening session that we did, that was on April 7. Okay, that one, let me come in here. Let me change the URL. So we'll go for YouTube /C/Trade-with-UFOs. That's our YouTube channel. All of you know that. You are connected with us. We have a collection of playlists, which if I click on the playlists, you can see here on April 7, sharpening for intraday 1. Okay, so this is the session that I am talking about that we went over on Sunday, where we started putting a series of rules together, okay? If you haven't watched this session, it's critical that you watch it before next Sunday, because we're going to be taking this to the next level and the next level and the next level, but we need to be all in the same page, okay? We have received in recent times many questions that you guys, some of you send via emails, and of course we welcome your questions and we love to give you answers, but at the same time, if you have been missing some of the sessions, somehow your questions are answered in those videos, and therefore we need to keep pointing you at those videos, okay? So make sure you don't miss it, okay? And by the way, talking about the YouTube channel, make sure you click subscribe and click on the bell, okay? So that way you are notified of the videos that we post, okay? Make sure you do that, okay? So anyway, so what's that session? Because on that session, we were talking about adding more precision for short-term trading, looking for more evidence, being more conservative, setting targets, trade management. So we started putting rules to do that. Of course, it was the first session out of a collection of sessions that we'll do. We didn't have the whole amount of time needed to build the whole methodology, but we started working on a series of things, okay? And the first thing that we said, I want to phrase it quickly just in case you miss it, so we are in the same page. The first thing that we said is that we're going to use two time frames. One is the one we call the common time frame, and the other one, I love Brian's suggestion on Sunday, where he suggested to call the second time frame the edge time frame, because it's going to be a unique time frame that gives us an edge, okay? Hence the name. So we're going to use two time frames, okay? The common and the edge time frame. The common are going to be classical time frames that everybody uses, such as the 15, the 60, the 240, and then the edge time frames, okay? Well, today we're going to be using the 2, the 8, the 21. That's what we're going to be using today, the 2, the 8, and the 21. But be ready, because on the next weekend, we'll start talking about share bars and, tick charts and, a series of other types of time frames that will provide an edge. Okay, that's why we call it edge time frame. Okay, so little by little, today we'll focus on the 2, the 8, and the 21, because we haven't covered any of that yet. Okay, and the one rule, we only went through one rule on Sunday, even though it was an hour and a half session. We discussed many critical things, all foundational, but all critical. So the one rule we talked about is that before you trade, identify the trend. Okay, why? Because, very quick here, a typical complaint, if you talk to traders all around the world, no matter how they trade, talk to them, and you'll see a typical complaint out there in the world, which is, I'm on the wrong side of the market. I enter, the market stops me out, and it moved a lot against me, or things like that, right? So, in other words, if every trade I took, instead of going long, I reversed it, I went short, I would have made money. Every time I shorted, if I reversed it, I would have gone long, I would have made money, right? So that concept of being on the wrong side of the market before you even plan your trade is critical, okay? You need to identify what is the right side. So, that's again, very, very, very critical, okay? And, trend, if you haven't watched the session from the last Sunday, trend, we talked about it from a different angle, okay? So it's important that you take a look, okay? So coming back to today, because of course I cannot repeat everything I said on Sunday, but make sure you watch it if you missed it. Coming back to today, we have the bottom time frame of the S&P 500 Futures is the 15-minute time frame. So this is the common time frame. And the upper part is the 2-minute time frame. This one is the edge time frame. What are we doing? What am I doing? Well, I'm actually going to wait a minute and a half. And the reason why I'm going to wait a minute and a half is because a minute and a half from now, what's going to happen is that the common time frame will give me a clear indication of if this candle will close above or below the average. Right now, it looks like it's about to close above. But again, I need to be disciplined. Since it's a 15-minute time frame, I need to wait every 15 minutes. And the clock will point at 9:15 a.m. New York time in 55 seconds from now. So I'm going to wait 55 seconds. It's looking like, okay, we don't have a guarantee yet, but it's looking like we're going to have a close above. If we have a close above, that will mean that we are in an uptrend. And if we're in an uptrend and price is entering a green UFO that is lining up with the average, okay, well, that would be a valid indication for us to take the trade, and we would plan to take profits using the rival UFO above. So I am getting ready here because this may happen quickly, and you guys be ready as well, because I may need to enter with a market order, because 13 seconds from now actually is not looking so good anymore, because it's looking like the candle is going to close below the average right now. So we have a little bit of a fight. So I guess we're going to have to be a little patient to see what happens in the end. Yeah, here we go. It seems that we're going to close below. Yes, so we had a close below. So look, it was looking like it was going to be an uptrend. This is when it's important to be mechanical and disciplined. So we had a close below the average. This is telling you you are in a downtrend. Based on what we covered on Sunday, we should be planning on shorts, and therefore we are looking for red UFOs lining up with the value of the average, which is 28.96. Okay, 28.96, which is kind of 28.97 right now, unfortunately does not provide any red UFO at this price. So the S&P, it's not giving us any opportunity to take a trade. So what I'm going to do is very quickly switch to the NASDAQ to see if the NASDAQ does provide us with that particular opportunity. Okay. So I'm seeing your comments there, Mark. I put my Tesla entry at 1 and I was not filled. I could have been filled at 99. Wow. You know, that's part of trading, my friend. But when that happens, to be honest, it's a little painful. So yeah, again, well done by not chasing price. You know, I rather have you make this comment, even though, you know, I get you, and, you know, I've been in that situation myself, and you know, I feel for you in that case, Mark. But at the same time, good job by being mechanical and disciplined and follow your plan. If you were going for 1 and you didn't get 1, then you didn't get 1, but you didn't chase. Okay, so good job. Okay. My charts are not clear. Yeah, Brian, thanks for that. You need to increase the video, the video settings, increase the resolution. Yeah. Orlando, you shorted it earlier looking at the previous candle trend. T1 reached, very good. Very good. Good job, guys. Okay, let's keep working on what we have here. So what do we have in the case of the NASDAQ? Well, in the case of the NASDAQ, it seems that the prior candle did close above. Okay, so we have the average is, as you can see, 76.43.15, and the close was 76.43.5. So 0.5 is more than 0.15. And therefore, we do have a close above the average. So with the NASDAQ, we're in an uptrend, and therefore you will be ready to take on a long trade. But for you to take a long trade, you will need a green UFO forming around 76.43, which this has not happened at the moment. Okay, we are waiting for some UFO to form somewhere around here, and that's when we will enter the trade very, very happily. Okay, now at the moment in time, it looks like, you know, that's not going to happen. Well, you know, don't desperate. Okay, I mean, we are traders. We do not never fall into desperation or anything like that. But we are human, and sometimes we do lack patience. So I want to remind you of the fact that you may want to review these charts every 6 minutes. Why? Because you need a minimum of 3 candles to form a UFO. Okay, minimum of 3 candles to form a UFO. And if you think about it, 3 times 2 minutes, which is the time frame that we're using as an edge time frame, that's 6 minutes. So even though we don't have a UFO now, 6 minutes from now, you may, right? So then in a mechanical process, in a repetitive cycle type of process, as you are looking for your intraday trades, okay, you just keep cycling those time frames, okay, that, you know, we discussed some time ago, that, you know, last Sunday, we started taking to the next level. We are still halfway into it, okay, and we're gonna be using 2, 8, and 21. Okay, so 3 times 2 is 6. Okay, right? You know, then we look at the 3 times 8 at the 3 times 21, and, you know, that's gonna be the cycle that we're gonna be using to look for our intraday trades, depending on the type of trader you want to be. Okay, so S&P and NASDAQ not providing anything for us at the moment. Let me redouble check the S&P just in case a red UFO form. No, we didn't have anything with the S&P and the NASDAQ. We'll come back in a few minutes and we'll keep checking on that time frame. Now, what I could do though is I could switch to the 8-minute time frame, okay, and 60-minute time frame below. And by doing so, what I'm doing now is I am switching from the combination 15 and 2. I am now moving to the combination. Oh, sorry for that. I just hit on the wrong button on my keyboard. So you are now looking at 60 and 8, okay, which is a different combination of common time frame 60, edge time frame 8. And that's what I have. I have the 60 below and I have the 8 above. Okay, so you could do that, right? And if I do that, what am I looking for? Where I have a close. Let's look at the prior candle. So 28.95.8 and the close is 28.95.75. So we are in a downtrend. So we are looking for red UFOs, which we don't have on the S&P. So what about the NASDAQ? What about the NASDAQ? With the NASDAQ, we have, I would say, a close below as well. Okay, we have a close below as well, which is 76.41 and the close is 76.39. So the close is below, so we are in a downtrend, so we are looking for red. The problem is that the red UFO is located at 54, where average is located at 42. In other words, that red UFO is too high, and therefore we are not going to use it. Okay, we are not going to use it for that particular trade. So with the S&P and the NASDAQ, we don't have any trade valid at this moment in time with our combination of time frames 15 and 2, 60 and 8. So the next thing I'm going to check is, what about the 240.21? Okay, so I'm going to come back to my charts. Input 21 on the upper part, input 240. Input 240 on the bottom part. Here we go. And notice how the NASDAQ is now in an uptrend. The prior close was above. The current, well, we do have it right here. The current value for the average is 76.31.90. Let's call it 76.32. And 76.32 is falling somewhere, you know, in between those two green UFOs. In other words, we have like two UFOs overlapping each other, kind of overlapping each other. In the middle, we have an average that represents potential for new on-field orders to be added. On top of the on-field orders already present in the market, my friends, good news, we have a trade with the NASDAQ. So what are we going to do? Well, we're going to plan on this trade, okay? We're going to plan on this trade, but what I want to do as well is look for my targets, because in this case, in this one, I have time. So I'm just going to input my continuous symbol at NQ. We'll need to talk about symbols on Sunday. So at NQ, because to look for the targets, I need to look back in time, and to do that, I need a continuous symbol, okay? So notice how, even if I move, you know, up, I really got nothing. You see that? I got nothing. So what I'm going to have to do is go for a larger time frame, okay? And for targets, okay, just like for trend, we're going to be using common time frames. The edge time frame is only for the entry, okay? So we're going to be looking at time frames higher than 21, which are standard time frames, common time frame. I'm going to go for 60, right? And here we got a UFO, but it's where the current price is. So, you know, that one, we're just going to ignore it. Nothing else above, okay? So then we're going to move to the 4-hour time frame. Okay, and here we can see the UFO that is available, okay, which is 77.16. Okay, 77.16. That is the bottom part of these two red UFOs overlapping each other. So 77.16. This is the price number I want to keep in mind, because this is where I'm going to set my final target, okay? Final target, okay? So 77.16, that's the value to be reminded, okay? To be remembered. So I'm going to switch back to NQN19. NQN19. And I just want to type things with a little bit of context for you, so you get to see what we're going to do, and it becomes a little more visual. We're going to have a final target located at 77.16. I just said that. Somewhere in the middle, we will also have a safety target, which I need to calculate mathematically. Then more or less here, we're going to have a long entry, which I need to also specify more precisely. I'm going to do that right now. And finally, below the UFOs, we will have a protective stop in case this market doesn't behave the way we expect it, okay, and instead of going up, that market starts going down, so then we will want to protect our risk with a stop loss order, okay? So now, what's the entry? Well, you know, if you look at, you know, this, let me move the text a little to the right. If you look at this green box, the top part of the green box is 75.32.5, okay? So 32.5, and if you look at the value of the average is 31.6, right? And also what you know is that if this market, you know, comes back down until it gets to the UFO, expecting it now to go back up, right? If this was to happen, when that market gets to that entry point, well, just because the average is an average calculation, you would expect the average to move slightly down, just a little bit, okay, because it's an average, but a little bit of an impact, that average with you know, safety target, okay, which is going to be something that we'll calculate afterwards. Then we're going to have our long entry located at this price level, and finally our protective stop, which is going to be located below the green UFOs. Okay, so again, I'm back to exactly where I was before. I didn't notice I was using the other time frame, and you know, hopefully I didn't confuse you too much in this process. Okay, let me be just a little more accurate, because 77.16 is kind of between 10 and 20, so I think that would be more accurate for me to do if I was to do something like that. Good. Perfect. So now, again, coming back to the entry price. Okay, so the entry price here, the average is pointing at 32. Our UFOs there begin. Okay, I'm just doing the same thing I did before. I'm looking at the green box. The top of the green box is 38. Okay, and here's the challenge here. Okay, and this is something that we need to discuss, and in the end, it's going to be a little bit of your personal preference. But as I was saying a minute ago, if this market was to come back down, okay, to those green UFOs, then the average will be slightly impacted going down. And slightly impacted may mean that instead of 32, it may drop to 31. Okay, it may drop to 31. And, you know, again, if you were to enter using the green UFO above, then you would be paying 35, where, you know, the average is 32/31 because of what I just said. So what should you do? Should you go for the average price or should you not? Right? And, you know, that really depends on your preferences and your approach to trading. You know, if you don't mind to miss the trade, because sometimes that market will come to the UFO, bounce from the UFO, and you just miss the trade because it never went as deep as where the moving average is. Okay? So it depends on, you know, what's your approach? Are you okay missing a trade, or you just don't want to miss a trade, right? Well, if you don't want to miss a trade, you would want to use 38, which is the top of this rectangle. The top of the UFO band is 38, so you will want to use 38 as your entry. If you're okay with missing the trade and you want to reduce your risk to the maximum, then, you know, I would suggest maybe to use the round circle inside the bottom UFO, which is 30.5, because this average, which is currently trading at 31.8, may drop to 30.5. So maybe you go for the inner UFO. Okay, but personally, so I'm going to do what I do for myself. Personally, what bothers me the most in trading is to miss a trade. So what I'm going to do is I'm just going to put myself in a position where I'm not going to miss the trade, which is go for 76.38. That's going to be my entry. Okay, that's going to be my approach to planning this trade, entering exactly where the green box is. Okay. Now, again, one more extra comment to what I just said. One more extra comment to what I just said is the amount of profit this trade may produce for you. So let's say your final target in the trade, instead of 77.16, happens to be 76.70, and you have very little profit margin. Well, the only way to have a trade which is decent when it comes to reward to risk ratio would be to enter using the bottom UFO, as I said before. And this is not about missing or not missing the trade. Now this is about managing your reward to risk relationship. But since this trade does offer a great amount of room for movement before reaching the red UFO we identified in the 4-hour time frame, then I have no problem entering at 38 even though the distance between long entry and protective stop is more, and therefore my risk is more, I don't really mind, because I am taking a little bit of a greater risk, but that's in exchange for less probability of missing the trade, and in exchange for a profit which is nice enough that sustains that risk. So I'm okay with that. Okay. Again, sharing a little bit of a few thoughts behind my mind while I'm planning the trade. Now, when looking at the stop, okay, and I know some of you have a few questions in the comments box. I'm coming to check those questions in just a second. Bear with me, guys. The bottom part of this rectangle is 7624.5. So just to keep it simple, I am going to propose the protective stop to be located at 7624. That's it. Okay. So, yep. So 7624. Okay, that's the plan. Now, if I do this, okay, and by the way, the market is just coming, so I better do this quickly. So if I enter at 38, let me get a calculator here. I was taking my time to plan the trade, guys, and now it seems that the market is coming to us. 78.38 and 76.24, so I'm risking 14 points. So if I add 14 on top of 38, I'm talking about 76.52 as my safety target. Okay, 76.52, and I will explain that in a minute. Okay, so let me place the order first of all. So I'm going to change the symbol here to NQM19, and it's coming to us. So we're going for 38. 38 is right here. We're gonna get filled right away, yeah. So let's do that and move my stop. So my stop needs to be located at 24. Here we go. Good. So I got my entry 38. Stop is 24. Now I need my target to be 52. And it's interesting, I am, oh yes, I understand. He created this as a buy stop. So let me do this. I'm just gonna move this down. Okay. Good. I just canceled the trade. I'm just gonna enter market, guys, because it's gonna be much easier for me to place the order. So I just placed a market order, just got filled. Here is my stop, moving my stop. Okay, so this is what happens when you make a little mistake here. So just moving my stop to 24. Yeah, the little challenge I'm having here is that I am using a little bit of a higher time frame, even though it's intraday trading. I'm using 21. And what happens with this type of time frames, okay, let me do this. So I'm just gonna change to chart trading. This is what I should have done before. Okay, so let me change to chart trading. So the matrix is a fantastic tool. I don't want to be executed. Okay, yeah, it's just been executed. Guys, you are just observing me making a collection of mistakes, placing the orders, just because I got over-relaxed, explaining the rationale behind the trade, and I didn't execute this properly, guys. Okay, so human error on my side. I'm just gonna close the trade, because obviously when you make a collection of mistakes like that, I'm not gonna be proud to execute this trade anymore. Basically, it's kind of like I didn't follow my plan, and therefore not good. Okay, so not too proud of how I executed this trade. But let me explain to you the little mistake I've made here. So, because still we have a little bit of value in what happened here. And by the way, if you guys executed the trade properly, this trade is valid. Okay, so I want to make sure you understand that the trade is valid and may work very well. My challenge on my side is that I executed it terribly, because I was all focused on the explanation, and I didn't execute this fast enough. Okay, the problem is that since I'm using the 21-minute time frame, the matrix, which is a great tool to execute intraday, especially with the NASDAQ, which is a market where, the value is 7,000 plus points. So, it takes many ticks to get to your target. And therefore, there is a lot of scrolling and a lot of dragging and dropping to be done in that time frame. Okay, if this was crude oil or so on, that would be fine. But with the NASDAQ, I should have right-clicked, enable chart trading or the order bar, and do the execution from the screen. Because if I had done that, then the execution would have been done properly. I would have had time to put my lines in the right place, and I would not have had this problem. Okay, so you either do this with the chart trading that allows you to drag and drop the lines on the chart, and you don't get into the trouble I got, or you go for order bar, which, to me, in a case like a time frame like this, right, that would have been my favorite choice, to just go ahead and enter a long entry with 2 limit and 1 stop level. And this is how I would have preferred to enter the trade, in a normal case, if instead of being focused on the explanation, I had been focused on the trade itself. Okay, so we said entry 76.38, and this would be with 2 contracts. Okay, so 2 contracts long. Stop market, we said 76.24 and 76.24, and then we said first target 76.52 and 7 target 77.16. That was the plan. If I had executed the trade this way, place order, yes, okay, assuming I made no mistake now, then I would have my entry, stop, and target, and now I just got filled, okay, and I have everything in place, okay. My entry has been here where we have the little triangle. My safety target is in the 76.52 area, and finally the final target 77.16. So again, the trade is valid, guys. You have just got to observe me make a mistake, okay, which this happens to all of us, guys, because we are human. Okay, not too happy that this happened, but that's what it is. So anyway, so we have the trade in front of us, okay, and this trade is now running. Any one of you guys was able to execute this trade and is running this trade as we speak? Anyone out there? Okay, and I'm gonna take a look at your questions and then back to other markets and other trades. So we have here, let me see. Yes, Dirk, I am using a calibration setting of 0.5 at the moment. We will discuss more about calibration over the Sunday session as well, okay? John Hammer, I can also see your comment about you noticed when I did the session where I introduced you guys to our TradingView app, right? The AutoUFOs for TradingView. I remember when I did that session, I was using the setting 0.618. Okay, if that's okay, John, I will talk about that more precisely, more properly when we do the session on Sunday, okay? Sandy, Jose, will you be doing stocks and ETFs this session? Not this session. This session we are doing short-term trading, Sandy, so we are doing Forex and futures, okay? But tomorrow we will be looking at stocks and ETFs, and we'll be playing with options on them as well, okay? Good. Perfect. So anyway, so let's keep going. So we have the trade running here. Let the trade be, okay? And now we're gonna be looking at other markets, okay? So again, back to the lower time frames. I'm gonna move to the 2-minute time frame. I'm gonna switch to S&P. Okay, so ESM19. Switch to S&P because even though we are long in the higher time frame for the NASDAQ, it may be. Let me load the 15-minute time frame below. So again, we have the 2-minute time frame above, the 15-minute time frame below for the S&P. Okay, the prior close was what? 28.96, and the close is 98. So the prior close was above. Okay, so we have a pretty aggressive change of trend. We cannot call it a change of trend yet because we will know this for sure in 6 minutes from now. This is when it will be 9:45 a.m. Eastern time. So we'll have to come back to this later. Okay. So back to the world of currencies. Okay, we're gonna be moving into the world of currencies while we have the NASDAQ trade running. We can observe on the right that there is a pretty important push to the downside. Obviously, it's not looking too good, but this is often. And this is just a comment that what I'm about to say, many of you know it already, but for the ones of you that never traded before or have little trading experience, beginning a trade where you see a lot of red kicking in, it's not necessarily a bad thing. It's many times a normal thing to happen because, for the market to come into your UFO, the market had to fall. And because there is a reason why the market is falling is because there is an intense amount of selling. So, it's common that price comes into your UFO and you see a lot of red kicking in and just vibrating up and down until finally that thing turns and pick up direction in the opposite direction. Okay, so we'll observe that. We'll come back to the trade and before the session ends, I'll give you extra instructions of what to do next because since that trade is planned using a 21-minute time frame combined with the 4-hour time frame, remember? That was the one we did with the NASDAQ. So this trade is likely going to last, potentially, especially if the trade goes in the green, this trade is potentially going to last for some time. Okay, so I'll give you some instructions, okay, on what to do, okay? But right now, we are focusing on the euro spot. Out there, futures traders, you can certainly replicate, what I'm doing with the euro spot here with TradeStation. You can certainly replicate and do the same thing with the euro futures if you do futures. Okay, you can do the very same thing I'm about to do here. Or I know some of you are not using TradeStation, you are using TradingView, so you can certainly do the same. Okay, so do the same would be you start with a 60. Okay, start with a 60-minute time frame. Okay, and what you would want to do is you would want to add a moving average. So I'm typing the word average. You would want it to be exponential. Okay, the standard default for the average, okay, as you can see, is 9. It would be nice maybe I'm going to make it purple, just like what we have in TradeStation, so that way it looks similar. Maybe we make it just a little thicker, so it looks a little clearer, okay? And that's it, we have it, okay? So here's the average. And what do we see on the euro in the 1-hour time frame? Well, we are in a downtrend. The euro closed below the average, so we are in a downtrend. And the value of the average is 112.72. So what you will want to do now is on the 5-minute time frame with TradingView, okay, you will want to look for UFOs around 112. I believe I said 72, correct? Wait a minute, because for just a sec I forgot. Yes, 112.72, right? And notice how on the 5-minute time frame we have 112.71. Let's call it 72, right? If you were to look at TradeStation, with TradeStation, the only difference I'm going to do with TradeStation compared to TradingView, because of course we have the same data, it's the same story. But what I'm going to do, what I'm going to change here, let me rephrase that. When I say we have the same data, kind of, because it's spot forex, and depending on the data feed of your broker, you may have slightly different information, okay? But what I'm going to do, though, is something that is going to be quite different, is that I am using the 8-minute time frame, which is my edge time frame. And notice how I don't seem to have anything around 112.71, 112.72. Okay, so therefore, we don't have anything to do here with this particular trade with the euro, and therefore we're gonna move to the next currency, which is going to be the Great British Pound. And after I look at the pound, I'll go back to the S&P with the 2-minute time frame and the 15. Okay, so with the pound, we have a close below the average. Okay, we have a close below the average. Okay, so close below the average, and you can see as well what's happening on the right side of our screens. Okay, not this again, just like a minute ago I told you, it's a common thing to begin with the red and then you end up with green. Okay, it's a normal thing. That's how you absorb the buyers and the sellers before a move happens. Now you were seeing green and now you see red again. So this is the process of having a market completely change direction and start moving your way for a long-lasting move. Okay, so I know for the ones watching this and you have maybe limited experience in trading, that's when your trading psychology gets impacted and you get euphoric and you get fearful, and you have this tendency or temptation to close it, or now you have the temptation to move your target further away. And so all those things happen in your mindset. Remember, let's be disciplined and let's understand that all those vibrations is the normal thing. And because it's the NASDAQ, remember, the NASDAQ is a market with a low price point, if you wish. Okay, it's only $20 per tick, and there are many ticks, and it's 7,600 tick per point. Oh, look at what's happening here. Massive selling is entering the market, guys. Massive selling. So let me switch. I'll come back to the pound later on, because it seems to me that probably today shorting the equity markets is going to be lots of fun. Okay, and I believe, Orlando, you were short since earlier. Not sure if you reached your target, but I would say probably you did, if you were short from earlier. So I want to check the S&P, not only because it went down and we hit our stop, but I want to check the S&P because it's 9:45 a.m. Eastern time, and therefore we just had a close below the average. So the close prior the average was above, the close we just got is below, so we have just a new definition for what the trend is. We are now in a downtrend. And what are we looking for? We are looking for UFOs lining up with 96. The one that we have is lining up with the bottom part of this red box is 96.75. 96.75. So I would say good enough. So what are we going to do? We're going to plan on a trade to enter short. Let me change the symbol on the matrix. We're going to be entering short. And guys, you guys do this with me. You decide if you want to use paper money, real money, all of this. As always, of course, that's going to be your decisions. But from a timing point of view, okay, we're going to be planning on a trade, entering where the red box is, targets are going to be below, stop is going to be above. So I want to quickly evaluate where my target should be, and notice that my target should be located right here down at 288. Okay, so I'm going to set my entry at, we said the entry should be a 96.5, correct? 96.75, okay? So entry 96.75. So we're gonna be entering on a short. Here we go, 2 contracts. I got the order in. Here we go. Okay, now stop is gonna be a couple of ticks below that. Okay, yes, so we have 75 to 75, so it's exactly 2 points. So I'm going to move my target 1 to 75 as well. So we have entry, stop, and target 1, and then target 2, we're going to drag it to the 89 area. You see, with the S&P, I have a much easier time dragging and dropping my orders because it's $50 a point. Also, since I'm using a 2-minute time frame instead of 21-minute time frame, so I have much less dragging to do, and everything fits on my screen, which was the challenge I had before. Okay, so guys, we have the trade here. Okay, we have the trade in front of us. Okay, shorting using the red UFO, lining up with the average, slightly above the average. Okay, we'll also talk about that on Sunday, because this is not ideal when the entry is slightly above the average. At the same time, price coming up is going to push the average a little higher. So we are more or less going to enter at the average price, kind of, more or less. Okay, it's going to be about that. So the trade is valid, even though, again, on Sunday, we'll add more precision with the volume charts and the tick charts. And really, I cannot wait to do that. But now, to have some practice in and to continue what we have been doing for a few weeks now, I'll just execute this trade, assuming the S&P is going to be kind enough to come to us. Okay. How many of you are ready to execute this? Anyone has placed the orders in the system? I would love to know that, just out of understanding the teamwork that we're doing together here. Babu, in the NQM19 case, there are 3 red UFOs before your target, but in the 200 we did not have any red UFO. In this case, what to do? Good, Babu. We'll talk about that on Sunday, okay? If that's okay, because your question is very, very valid. But basically, your question has to do with trade management, and we're gonna be discussing different things that you could do for trade management purposes. But these also implies that I need to explain a series of things that I haven't explained yet. So unfortunately, I cannot answer that question properly now. So obviously not ideal, but please bear with me because we are still halfway into the process of building a methodology using the Sunday sharpening sessions. Okay, so again, out of practice, I'm just taking this trade. We will make this better. Okay, we will make it better from an entry point of view. We will make this better from a target point of view, and we will make this better from a trade management point of view, which is your comment, your question, Babu. Okay, good. So I can see some of you are with me. We just got filled. Very good. So we're in. And now let's let the trade play out. Okay, let's let the trade play out and we'll see what happens. Okay, we have the trend in our favor. You can see in the below part of the screen, we can see it very well. We entered exactly where the average is. Okay, so our entry makes sense based on the methodology. Okay, you can see that there is a lot of a little bit of extra buying, which could be buying or just could be the vacuum effect, because the greatest concentration of orders happen to be where the circle is, okay? And sometimes price will just rally a little extra just to hit that bigger pile of unfilled orders. That's what I'm calling the vacuum effect. You know, prices go up because a lot of buying, or prices go up because there is no selling, right? And no selling means that the selling happens a little higher. That's the vacuum effect, right? And so now, you know, we have this entry. So the selling is kicking in. The market is going down a little bit. Okay, and we are now like 3 ticks away from our safety target 1. It would be obviously ideal to reach the target 1, because, you know, if we reach the target 1, we totally remove the risk of the trade, and this opens the door for you to take other trades in your account without adding risk to your portfolio. You know, putting on the side the peace of mind, obviously, that this provides to a trader when, you know, you remove the risk of a trade. Okay, but again, you know, the up and down that we can see on the P&L, okay, you need to train your mindset for this to not to impact you, or not to excite you, not to upset you, okay? Even though, of course, we love it when it grows green, okay? But, you know, we have no control over it, so we need to always be humble about that fact and always manage a trade based on the from the probability point of view, from the probability standpoint, okay? So we went 1 tick away from target 1, our safety target. Okay, we just reached safety target, so we just removed the risk of the trade. That's it. No more risk. So good. Okay, so again, why is this happening? Well, because we had a precise entry thanks to the UFO, but on top of that, we did it in the context of the trend, etc., etc. Okay, and now, again, now you could just forget about all that trade and leave it alone until it gets to 28.89 and go ahead and take other trades. You could certainly do that. Again, eager to get together again on Sunday, so we get to execute other trades. Sorry, let me rephrase that. Eager to get together on Sunday, so we can talk about other trade management rules, so you can do much better executing more trades at the same time, and also even better, even more, the profitability of your certain trades. Okay, so right now I'm just watching this, okay, especially because some of you are in the trade with me here, so some of you have real money on the line, so I want to assist you as much as possible. The first trade was a little bit of a not ideal way on high I entered, and you know, I'm sure we have a little bit of a smile on our face, you know, when you guys saw what happened, and therefore I understand that not all of you, or only very few of you, would have entered the trade, but this one I know a bunch of you are in the trade. So I'm just gonna wait, and the instruction I'm gonna give you right now, it's simple. If we hit 200, okay, 200 profit, or of course, if you have more contracts, it's gonna be more for you. But basically, if we hit 2892.75, which basically is double of the profit that you made when you hit target 1, so then I'm gonna start moving my stop. Okay, in the meantime, I will not. Okay, and that's the only rule for trade management I'll give you today. Again, on Sunday, we will add more rules that have to do with the trend condition, is a trend strong or weak, you know, and a series of things that will make our trades much better, okay? But right now, we are just watching this. If this market was to drop by 3 more ticks and hit $200 profit in this one contract, then I will grab my buy stop and move it down, okay? And it's looking good for this to happen. And the reason why I'm making this point is because we are trading in the direction of the trend. So the market is more likely to keep moving lower than higher at this time. And on top of that, there is no green UFO close by, which, in other words, it means that unless some big player enters the market with a lot of buying, normally there is a higher probability for the market to go down than up. So we should be hitting our 200 mark in no time. So we are 2 ticks away. We're gonna be patient. Okay, 2 ticks away, 3 ticks away, 2 ticks away. So that's it. We hit 200. So what am I gonna do? Move the stop to break even. Okay, and now from now on, I will just wait until I either reach 300 or red UFOs form, and I will now be ready to execute those other trades. That's gonna be the plan. Okay. London trader, yeah. I mean, you are very kind to me. Okay, I mean, I have seen other professionals, okay, trade in front of their traders. Okay, so I don't think I'm the only one. Okay, but at the same time, you know, for me, trading is something that I do and I love and I enjoy, and I totally understand that trading is about skill, and you cannot develop a skill without doing it. Okay, so I want to do it in front of you guys, okay, because hopefully it helps. Okay, and also not only it helps by you seeing it, but most importantly, it would be good that you replicate, so that way you can also grow the skill on yourself and also the confidence level. Now, when I say replicate, again, always very careful with that word, in the sense that you know, you could replicate those trades with paper money or real money, and all of this depends on your approach to trading. Okay, you decide that. Jay, how do you handle the trade when you trade only one contract? Well, Jay, when you trade only one contract, of course, you cannot do any sort of scale out. And if you cannot do any sort of scale out, then it's less advantageous. Okay, because you know, you cannot, first of all, you are limited to run one trade at a time, unless you are willing to take more portfolio risk. And second, you have to be more right to not to hurt yourself. Because, for example, let's say I'm wrong on this trade. And what I mean by wrong is, let's say I'm never going to reach the bottom target, which could happen. Okay, I mean, easy. You know, if some big player enters the market and buy big time, this market is going to go up. I have no control over it. So, you know, that would be being wrong. I never hit my target. That would be being wrong. Well, even though I would be wrong in this trade, no matter what, I am going to make $112.5, because if I get stopped out, I will make another 12.5, and I already collected 100. So no matter what, even though I may be wrong on this trade, I still make 112. So that gives you an advantage. So if you can only trade one contract, Jay, my recommendation would be to find markets with a lower price point, so you can trade multiple contracts with markets of a lower price point, and therefore you can scale out. Okay, I don't know if you guys are aware of this. We'll do special sessions about that. Okay, because next month in May, for futures traders, it's gonna be a special month. And what I'm talking about is the micro E-mini contracts that the CME is about to launch. Okay, so, you know, as a technology company, you know, our company, Tradictive, we are partnering with the CME, and we're going to be doing some stuff related to the micro E-minis. Okay, so, you know, I'll talk more about that in May. But that's ideal, because the micro E-minis are going to be 10 times less compared to the size of the E-minis. So, for example, if the S&P 500 I'm trading right now is $50 per point, the micro E-minis are going to be $5 a point. So now, Jay, you can use 2, 3, 4, 5, 10 contracts. You know, you can use multiple contracts, and it's going to be much less, you know, P&L in your trades, because the price point is less. Okay, so we'll talk about that in May, because those contracts have not been released yet. But definitely, I recommend you, if possible, I always would recommend you to use multiple contracts per trade, because it gives you this possibility where you remove the risk of the trade. So if you are wrong, but you make some money, that's good. But on top of that, you have another benefit, which is now I can go ahead and take another trade, right? And now I'm running multiple trades in my portfolio, so in less time I make more money. Okay, good. So, Dirk, Jose, I am seeing markers on your chart where you enter, and also for the safety target. Yeah, you mean the little triangles? Is this what you mean? Because this is something in TradeStation. I mean, I'm not sure I fully understand your question, okay? But let me know if this is what it is. So you have an option in TradeStation, which is when you right-click on the chart, you can activate format, account orders and positions. And here you can tell TradeStation to display positions arrow for the filled orders, open for display order lines for the open orders, for the queued orders, for the cancel orders, for the expire orders. So you can tell what you want TradeStation to show you on the screen when it comes to orders and execution. Okay, so that's what I see. Okay, so I believe it's what you are asking for. So right click would be the way for you to get the same. Okay, London Trader, very interesting. I wonder how much volume there will be in the micros. That's a big question. I wonder too. But I believe that certain markets will probably gain a lot of volume quickly, especially the S&P. I would kind of be shocked if that's not the case, especially now that even other contracts that were traded by many people that come from the retail world, like for example Bitcoin futures and stuff like that, many of those contracts now are not going to be trading anymore in the futures. Some exchanges are canceling those products, so a lot of that volume I believe would be directed into those micro E-minis. So again, we don't know because we have not seen it yet, but I think it could be a good product. Okay. In any case, even if you don't have that, for example, Jay, going back to your question, you can trade the Euro futures. It's $12.5 per point, okay, per tick in this case. So pretty okay. So anyway, guys, look, we are reaching this time in the market where the market is now moving a little bit of sideways. Okay, good news. Okay, we have a few things in our favor. Okay, what is in our favor? Well, if you look at the bottom part of the chart, okay, what happened here? Well, notice how when we entered the trade in this candle, the average was at this price, where the average now in the next candle is a little below. So in other words, this market is proving to be in a downtrend and the average is moving down. And remember, the average represents a price point where unfilled orders to sell may be added. Which means that if this market was not to progress towards the target and was to progress back up, it will hit the average that now is lower than before, potentially adding more unfilled orders to sell, potentially pushing it down more. So we are in a valid trade. Okay, we just need to wait. Every 6 minutes, you may have a new red UFO form, and that would give you the opportunity to keep moving the buy stop below. Okay, right now, what I would like to see, it's either a red UFO form or this market reached 300. If this market was to reach 300, I would move my stop manually to 100. If a UFO form, let's say for example, a UFO form, let me do that again. A UFO forms here, a red one, right? And the market went down, 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 down. So what would I do? I would take my stop and move it right here. That would be what I would do, and keep moving the stop down, following this market movement to the downside, the way it is, right? So if instead of going to the downside, it was to reverse because some big player enters the market after we enter the market, and some big player starts buying very intensively, of course, they have the power to move the market up, but you'll be stopped out, making the most profit as possible, even though you never reach the target. So that would be your trade management rule that I would like to leave you with as we conclude the session, because it's time to conclude for today. Okay. Any final comments, guys? Any final questions from your side before we finalize the session? El Daniels, Jose, what calibration setting would you recommend for Forex? So El Daniels, again, let's talk about it on Sunday, if that's okay, because I have a lot to say about that. And it's not like I can give you a magic number because there are a few what ifs. And I want to give what ifs for all of you because all of us are different when it comes to trading and our psychology as a trader. So I want to give different what if possibilities to all of you and different options to all of you. And I want to discuss this to the next level. Okay. So again, I don't mean to kind of make our Sunday sharpening sessions like, super, super, super interesting. But the fact is that they will be super interesting because again, what I just said may sound a little funny, but I'm serious. We are putting together a complete methodology where I'm going to address every angle of the methodology with rules for everything you could imagine, right? So the idea is that, we do that during the Sunday time. So during the trading time, like today, we can implement it, okay? And of course, the day like today, where I'm halfway towards implementing that methodology, some of the answers I'm giving you are partial answers and not complete answers, and not complete. And I feel for that a little bit because, I wish I could, but then that would take me multiple hours today, which we don't have the time. Okay. So anyway, guys, if you're in the trade, good job by working with me on that. We'll see what happened on the trade. Again, things are looking good. And still in the downtrend, everything according to plan. And not much to say again. So just to repeat myself, 2 instructions: if new red UFOs form, trail your stop above the red UFOs, move the stops down and put them above the red UFOs that may form. If no UFOs form and the market falls like a rock, the moment it gets to 300, or if you're using a different size, you will not see 300, but you would see the market hitting 2890.75. So if the market gets to 2890.75, move the stop to 2894.75, and then just wait until you get to your final target. Okay, and if you don't, you'll make 200, and if you do, you'll make 487.5, which is kind of like a 3-to-1 out of the risk we took in this trade at the beginning. Okay. Anyway, my friends, super pleasure. Looking forward to see you tomorrow, guys. Tomorrow we are doing the longer term. We'll be discussing options, stocks, ETFs. We'll be looking at Forex markets. Hopefully we'll have time for that too. And, hopefully great trades tomorrow. The ULL trade would be concluding. Okay, so supply and demand trader. Congrats on that. We'll also be looking at other trades like the Tesla and other trades that we'll plan together. Okay. Elen, will you be having a session on trading with UFOs, compare cost with TradeStation and UFO? We can do that too. Maybe Sunday is a good time to talk about that as well, because, we actually received many questions about that. Let me show you one last thing before we go, in case you have not seen it. So if you get into our website, tradewithufos.com, because we have received a few questions on emails, where, and it's normal, guys, okay? And in one hand, it may be because of how I have explained certain things, where sometimes I may give you a better explanation, sometimes I may give you a not so good explanation. So sometimes we have received in recent times a few questions where some of you were saying, okay, so, hey, I'm a little confused, what's the difference between the trading view, the trading station, the whatever. So something I didn't point at is the fact that we have a new section on our website. It's called Join. And if you click on that section, I believe this page may clarify a little better the differences of the different possibilities for you to acquire apps to trade with, which is our TradingView app, our TradeStation app. But even though this page hopefully clarifies a little better what we provide and your monthly subscriptions and all of that stuff, still you may have technical questions about, okay, but wait a minute, with the TradeStation app I could do that, but with the TradingView I could not, or with the TradingView I could do that, but not with the TradeStation app. So then we can get into technicalities of what the apps do, because some of you may want to use one only and it's good enough. Some of you may want to use both, depending on what you do. Okay, we have traders that are using the TradingView app only to have the UFOs on the phone. Okay, and that way, when they are away from their computer, they can do trade management. We have people that actually plan trades with AutoUFOs for TradingView, and they don't even use TradeStation. We have people that love TradeStation, and the only thing they do is to use TradeStation. Okay. By the way, the Euro trade hit the red UFO in the 5-minute time frame, in the context of the 60-minute time frame downtrend, getting close to the average and falling down from that average, thanks to the 5-minute time frame UFO. So again, very same concept compared to what we have seen in the S&P. Same story, different time frames and different market. Okay, so again, there's a lot of money to be made in the market when you apply all of these mechanically. And by the way, I love it. New red UFO just formed, so we are now moving the stop right above it. Above it will be 96. Okay, so 96 right there. This is where it goes. Stop is now moved to 96, okay? And let the trade play out. My friends, I could talk about this forever. I just love it, and I love to spend time with you, but I have to be respectful of your time and let you go. So we'll see you tomorrow, and we'll see you on Sunday, hopefully both days. See you then. Take care, guys, and thanks for joining us. Bye-bye.